I see you've written down the value of your shopping centres a little this time around. Talk to us about the dynamics that have led to that taking place.
Yes, well, as you know, the retail space has got its challenges, but what I'd say first of all is that if you look at our retail portfolio, around half of it has seen values just in the sort of plus or minus 1% range. That's because we've got assets like leisure, hotels, outlets and so on, all of which have performed very well. When you look at specifically the shopping centres, there is a mixture of both some pressure from CVAs and administrations, as well as a slight outward yield shift. So the value is just slightly writing down the value in the current market.
What are you thinking in regards to plans to change or redevelop some of your retail properties to homes, to real estate properties for people to live in? Is that going to be a big plan or only a small part of what you do?
Well, I think it's extremely unlikely that we would be doing that outside of London. We have only 6 major shopping centres outside of London, and those are big sort of destination shopping centres, which we think will be the most resilient of all retail properties. When it comes to homes, we have 3 suburban London retail sites where we can put some additional housing on that. So around 4,000 homes could go onto those 3 sites. But that would be incremental rather than replacing the retail. So, for example, at the O2 Finchley Road, there is a surface car park there, and that's where we would be looking at residential as an additional option. So you're looking at mixed use, you're not looking at replacing retail.
OK, let me ask you a little bit about Brexit, Martin. Your business has had a couple of years to get used to the idea, the sector has had a couple of years to get used to the idea that this is coming. Do you think the market has responded in the way that you thought it would? You kind of battened down the hatches at Landsec. Has the office market, has the property market in general held up better than you might have anticipated or not?
Well, I think the London occupational market, so demand for London space, has held up stronger than we expected. So if you look at this year, take-up has been very good, and supply has met that. So rents are broadly stable, yields are broadly stable. So yes, that has been a stronger performance than we expected. But if you look ahead over the next 6 months, I think the right place to be is low risk. Our office portfolio is absolutely full. We have the only development site that we have is pre-let. So we still think the right place to be at the moment is low risk, but with potential. So we have some schemes that we could start next year, but the next 6 months looks like an interesting place.
I just want to bring our viewers some breaking news on Telecom Italia. The CEO, unrelated completely, obviously, to Landsec and Martin Greenslade, the CEO of Telecom Italia is said to resign. We'll continue to follow this story for you, but I just wanted to break in with that developing news on Telecom Italia. Just get back to Martin Greenslade, the CFO of Landsec, talking about real estate development. If you step back, Martin, and look at the kind of 35,000 foot view, what's the future of real estate? You know, are we thinking maybe planned communities that were panned previously are going to be the right way to go to reuse all of this space that was maybe overdeveloped for retail?
I think if you look back through the history, property has always reinvented itself. It's always gone to where the demand is. And I think what you will get is you will get retail centers that serve communities, that are the big destinations where people want to go and shop. I think whether they have more mixed use on them, we now have car showrooms in some of our shopping centers. I think you will see much more leisure in those centers. So I think these will be assets that serve the community. So they will evolve to meet people's demand. And if people want to shop online and shop physically, then they can do that. Still, a lot of retail touches a physical store, around 85%.